Hey, what's up, everybody? Happy Tuesday for everybody out there. Hope you guys are happily back from your 4th of July. Hope it was well spent with your families, with your friends. Hopefully, not spending too much time on the charts. And also hope you guys have had a very nice return to the stock market. I've seen that the S&P 500 closed in a green day today. Yeah. Oof, we're seeing more and more green candles. This is usually good news. The bulls are somewhere around here. So don't get overcarried. Don't get too excited about this because it's too early. It's too early to try to ascertain whether the market has bottomed or not. As per our works, it's far from happening still. Uh, this sort of counter trend movements also happen in bear markets. Don't think that it's just red candle, red candle. In red candle, red candle, also breathing a little bit the downtrend, and then more red candles. That's usually how it goes. It doesn't go like this and then upwards in a uh, likewise fast pace. Not at all. So don't get overcarried. Be careful. Manage risk always, and yeah, be prepared for everything. Bullish scenarios, bearish scenarios. Don't get overcarried though, especially when you see the market trading below this 200 EMA daytime frame, 10 EMA on the weekly, on the monthly. I do see some positive signs though. We do see a lot of the ratio of green candles to red candles improving substantially. We've also seen something very inciting in the weekly time frame where for the first time you see a bullish divergence. See RSI making an uptrend, whereas price is making a downtrend. Yeah, like this. Even this applicable, not too pronounced, but yet again, it's something already very weak. Very weak, very weak, very weak, very weak. Don't get overcarried. Be careful. Um, Definitely bearish still, but I mean, I like to see these candles popping up sooner, more often. This green candle, this bullish candle here also, this diminishment of momentum from the bears. Yeah, these two red candles are very ugly, so to say. And as per our work, yeah, we're not in a bottom yet, but starting seeing momentum slowing down. I'm not ready to talk about S&P 500. This is just a brief introduction, of course. What I have seen today, I mean, I just bet I was not the only one for sure. A lot of people must have noticed it, this for sure. I love stocks. That's my cup of tea, so to say. I couldn't avoid but noticing that there's a specific currency pair that triggered my curiosity and was catching my attention. I've got all the supply and demand areas and trend lines and all that already sketched up. That's because I've been tracing this out of curiosity. I've been tracing this currency over the past months, and yeah. I mean, I don't have any feasible, any optimal, any efficient means of tracing whether this was a popular asset or not today. Whereas in stocks, it's very ostensible when you see the stocks with the most volume, or you see the biggest market caps, or the stocks with the most price versus volume in a day. Then you see that which particular stock grabbed the bulk of attention of the investors throughout that day. I'm not a forex trader. I'm not a forex investor. So the odds are there are very good means of ascertaining the popularity of a specific pair. If you do know, if you do know how it's done, then yeah, this is your opportunity to pop up and teach me something, please. But yeah, I was out of curiosity. I've been because I mean I'm in Europe, so I invest in dollars also. So I sort of like to follow this currency pair, and yeah, I've been tracing it since it made this last lower high on the longer term downtrend. This was back in May 2020. And yeah, that's when I drew this trend line, and this trend line is being perfectly respected. 10 EMA also very respected, both on the uptrend and downtrend. And when was it? It was in April 2022. We saw this abrupt bomb, this abrupt breakout, and which was meant to mean well, it was meant to mean that probably this longer term downtrend was about to come to an end, and the bulls were starting to dominate. The long term bulls were starting to dominate. This struck me as a surprise, by the way, because all you hear about is this currency debasement, quantitative easing, a lot of money being printed, whereas you see the USD euro. Or the US dollar against all currencies getting valued, appreciating in values against all of the currencies. That's quite surprising to me. I mean, I'm not a macro or fundamental analyst. I guess investors also like the U.S. dollar as their go-to to hedge against inflation, or their go-to safety asset in times of uncertainty, in times where stocks are not performing as they should. Far far from that. In times that bonds, I mean, are picking up some pace. Yeah, bond yields. Excuse me. That's an important correction. Bond yields are starting to pick up some pace and making some new issue bonds more attractive. Commodities. Yeah, commodities have been in the bull market, but last month was very oof. There was some severe carnage on the commodities market also. Uh, Luckily for economy, I'd say. Yet again, not being a macroeconomist whatsoever in the stuff, but this inflation thing was starting to pick up some serious pace, and yeah, the USD euro just grabbed my attention. That's for sure, because it was doing your symmetrical triangle since November 2016. Volatility was contracting. It was making higher highs, but also lower lows. Suddenly, in April 2022, it broke out from this trend line. So it's now making new higher highs, which might be an early sign that the US dollar euro is about to enter in a. I mean, if you don't consider this a bull market already, that the US dollar is about to enter a new longer term bull market against at least against the euro. For me, what grabbed my attention today was the fact that it did break out from the €1 threshold. Yeah, this resistance area that was being laid out as of the end of March 2015. When was the last time? Last time the dollar was this high was back in 2002. Um, okay, it's fair enough. I mean, it's very straightforward as to what to expect next. How would you go about the US dollar? I was with a friend of mine, he's a stockbroker today. Of course, he made also the same comment. He told me that he does not believe that the dollar is gonna keep on making new highs. That it's unsustainable. You do see some signs that the dollar is getting like overbought in the RSI, 71.30 year, 72.09. It might be nothing. It just means that there's a lot of momentum on the bullish trend, and it usually doesn't last this much. It tends to lose momentum here. Maybe maybe consolidate here a little bit, and then break out again. Uh, Maybe what? Maybe what else? What? Maybe as a bullish scenario, yeah, that would be consolidating somewhere around here, keeping up, breaking out. What breaking out and keeping up the uptrend? What would be the next? This would be the next resistance level. Around this area. Around this area would be the next resistance level. Okay, here we go. Around this area. So in the place where you'd get $1.027 roughly in this range, to 1.0526 per euro. Excuse me, where $1 would be worth 1.02 euros, and $1 would be worth 1.05 euros. That'll be a bullish scenario, I would say. As to a bearish scenario, yeah, we do have the thesis that the bull market is overextended, that you see the RSI reading overbought every time frame, I think. Yes, weekly time frame, daily time frame. So this is a very overbought market. It might not mean anything. Yet again, we need to wait for further price action. But I need to wait for this candle to close in order to make a decision. The price is definitely trading in a value zone, so I definitely be waiting for the upcoming signal provided by this candle. If it does close above this threshold, as laid out by this resistance area, I'd be bullish. I'd say the odds are that the uptrend will continue, regardless of the RSI. Maybe the price will just consolidate a little bit and then break out again. If we do see a false breakout here, as in price is trading above this threshold. If I see price closing below this threshold, I'll definitely be bear for sure. Not saying I'm going to invest on it. Trading currencies is not my thing. It's highly leveraged. I'm more a stocks guy. But I would say that there will be good odds that if the price closes below this threshold, there would be either a distribution phase or even a reversal of the trends. The false breakout is usually a potent signal, and you see. And now that the month has started, what you'd see with this candle, with this July candle, would be something like a shooting star. Since the price is here already, it would mean that the price would go to these levels, opening here, these levels. This will leave a candle something like this, which is usually a good trigger for a bear trade, where price is in a value zone. And I've got nothing much to add. I mean, it was not bulky in content, so to say. What else do I have to say? Trend lines here: one touch, two touches, three touches here with this one, which is afterwards broken out. One touch, two touch, three touches. These are valid trend lines, technical analysis wise. Um, I would have liked this triangle to lose a little bit of volatility and contract here, and then breakout. It's also just as valid when you see this ginormous bullish candle you're breaking out of this range, this so to say, and you do see that the price afterwards respected this resistance zone as laid out by these candles, rejecting this even psychological area of the 0.96 euros, 0.95 euros. So you definitely see why forex traders can make a truckload of money, because these currencies tend to be very respectful of technical analysis. This one is a major example. And in short, summing up and recapping, bullish scenario be if this green candle was to close by the end of July above this threshold of this resistance area, Upcoming support zone, resistance zone would be this area, 1.027, 1.043 euros. If the price closes below this threshold, you'd see a candle something like this, which would be a very nice false breakout trigger, and which would be also a very nice foreshadow of good odds of upcoming downtrend and reversal. That's it. Having this said, I'm no financial advisor. Once again, I do not hold a CFA. I like charts. I like technical analysis. I read a lot. I've been trading for many years. Yeah, I'm a price action analyst. I'm a technical analyst. I tend to keep myself with stocks. But technical analysis and price action is a transversal to any kind of market. So as you can see, uh, technical analysis is followed by the book, by the US dollar euro chart and the price action and price movement. It's everything for me for you guys for today. Hope you guys have enjoyed it. If you guys have any further comment to make about this currency pair, just feel free and leave me a comment. Let me know if it was useful. It could help you out, for instance, as providing like a contrarian thesis to your bullish or bearish thesis. It could also help you out finding new ways of analyzing a stock, prompt you to study a little bit more technical analysis and price action, and be creative. And technical analysis is fantastic, and charts are beautiful. See you tomorrow, guys. I hope you guys have enjoyed it. Cheers.